Hi guys, welcome to today's video, which as you can see there is based upon September. Now I'm sure most of us have heard the Green Day classic. And no, I don't think Green Day were talking about seasonality within the stock market, but I think there's a lot to consider, and what I'm going to walk you through are some of the key aspects of September that you absolutely should be aware of, because seasonality is absolutely a thing. Now, before I get into this, please do pause the video and just make sure you're comfortable with that before proceeding. And if you do get some value from this video, in the bottom right hand corner here, you should have a subscribe button. Feel free to subscribe to us at any time if you get a bit of value from this. So, hands up, those of you that maybe look at the stock market and don't understand the trends that are presented to us year after year after year. Now, what I'm really talking about here, and this is why September is such a notorious month, we can go all the way back to the, Charles Dow, and we can go all the way back to the beginning of the stock market, the creation of the indexes, and we can see that with the Dow. It's very, very clear that September is a very notorious, very difficult month for the market. Now, it's not just the Dow, that also applies to the S&P 500 dating back to 1950. We can see historically September is a very difficult, very choppy month. Again, we can go back to the year 2000, and this is tech. Tech notoriously has a difficult September as well. Now, at time of recording this is middle of September 2019. And there are a few things that we absolutely need to be aware of on a technical level with the market. And also, there has been some news events which it never fails to surprise me that they always come in at key support and resistance levels in the market. And what I'm really talking about here, this is the S&P 500 index. And we can clearly see that we've got a very clearly established resistance level. Price is currently pushing up against resistance. The hope is that the stock market will blast through this level and go on to create new highs. That is the absolutely best case scenario here. We also have the Dow. We're pushing up against highs, all-time highs, and we really want to break through these levels. However, when we look at things like the rotation graph, which tells us what sectors are starting to move, what are the leading indicators, the leading momentum areas of the market, we can clearly see at the moment, these are the three areas that I have narrowed it down to. We've got semiconductors, we've got financials, and energy are now moving into the leading sectors of the market. Now, the one that's interesting me at the moment is this one here, which is energy. Now, the reason energy has been highlighted over the last 7 days is we are now starting to build momentum in the energy sector, and it's now become one of the leading areas of the market. Now, this was before the news event that I'm just quickly going to touch on. And what I'm really talking about here is we've got this situation that is absolutely brewing in the Middle East with Iran. The US are now getting involved. But what it really centres on is what happened in Saudi Arabia over the weekend. Looks like there's a bit of a conflict between Saudi Arabia and Iran. And what we know about conflict in the Middle East, especially when oil is involved, energy prices, oil companies all profit and make lots of money. Now, this to me isn't a coincidence. This is something that dates back to day one. The one thing that drives oil prices is war in the Middle East. And I think everybody understands that. And I'm not going to get into any sort of political discussion about it whatsoever. I think the only thing that we need to be concerned about is what does this do to the stock market. And what I really want to highlight, and as I said, and the key here is that we're in the middle of September, and I've deliberately kept this presentation back so that I could post this mid-September, because this is something that I'm fully aware of. I understand that not everybody can observe the markets and suppose pay close attention like I can for 8-9 hours a day. But with the S&P 500 index, we can clearly see that it's the end of the month. Now, if we just think about this, this is the daily performance of the S&P 500 historically, dating back to 1950. And we are currently in and around here, but it's historically the end of the month that the S&P 500 has a bit of difficulty. Now, given that we are pushing up against resistance in the overall market, it seems pretty logical to me that if we get a rejection of this key level, which I don't know if that will happen or whether it won't happen, I think that the one thing that I would say to absolutely everybody that's watching this is nobody knows what's going to happen next. Absolutely nobody. Technical analysis gives us an edge, but it doesn't predict the future. It gives us a pattern of price behavior that repeats year after year after year. And this is just something that we absolutely should be aware of. So the S&P 500 historically stalls at the end of the month. The Dow, however, has notoriously had a horrific September, and as we can see again, the common theme is that it just progressively gets worse as September moves forward. Again, we can then break it down to tech, and again, it's historically from the middle to the end of the month that tech starts to falter. So the question that we really should be asking ourselves here is, what is going to happen if the major indices reject the key historic resistance levels that we're currently pushing up against? Now, best case scenario is that we blast through the resistance levels and we go on to create new highs, which will render the September problem obsolete. I would love to see that. Nobody likes an advancing trending stock market more than I. But for those of you out there that are maybe a bit too aggressive, you're maybe a bit gung-ho, I would suggest it seems pretty logical to me that you might want to just kind of scale back a little bit and just wait and see what happens in the major indices. Yes, with energy advancing, with war potentially brewing in the Middle East, absolutely, the oil companies are where you would possibly want to look. Areas like ExxonMobil, Chevron, ConocoPhillips, the list goes on. Again, defense companies will be an area that you might want to consider, and that is just logical and that is common sense. You will find, if there's a breakdown in the major indices, that the tech stocks will fall. You'll probably find the financials fall, even though financials are leading and they are threatening to kind of break out. A lot of the major investment banks at the moment are breaking out to all-time highs, JP Morgan, for example. But by and large, you can expect the majority of stocks to fall if we get a rejection in the major indices. Now, just to throw a spanner in the works, what I have also done is I've looked at the 10-year performance. Now, over the last 10 years, we can actually see that September has been fine over the last 10 years. Now, that stands to reason because we've been in an incredible bull market and there's been lots of profits made. Hopefully, if you're watching this, you've done very, very well in a bull market. If you've not made profit in a bull market, I would highly suggest that you might want to rethink your strategies. But there's been plenty of money made right across the board. S&P 500 has been doing very, very well. The Dow has been doing very, very well over the last 10 years as well. And as we can see, tech has just been a leader in the space. So that's the caveat. So what I would say is, if the bull market is going to continue, I think we do hopefully break out into new all-time highs. That would be my expectation. However, I think the voice in the back of my head is always saying, Sam, what if you're wrong? And that's the question that you should always ask yourself. It's not a case of, always thinking that you're going to be correct, because capital protection should always be the number one priority, and profits will generally follow good capital protection and risk management strategy. So that's absolutely something to be aware of. And like I said before, if you have enjoyed this video, please do subscribe. Bottom right hand corner, you can subscribe really easily. And if you want to take it a step further, you can jump onto our website at honeystocks.com and check us out and see what it is that we do. But thanks very much for watching, and maybe I'll see you in the next video.